I'm delighted to get you three guys round the same table. So, corporate treasury, what's going on in corporate treasury? I mean, are the fundamentals changing, and what are the key trends that you're seeing?
I think there's been quite a shift post the financial crisis. The role of the treasurer has become so much broader and really driving success within the company, whether that's through more efficient working capital, whether that's through enabling the sales teams to sell more because of a more integrated approach to managing the credit process.
And don't you think, Matthew, not only has the role changed, but the pace of change is so much greater than it was in prior business cycles. I look at what we as a business have to offer to our clients from a technology perspective and a new product perspective, and the pace of change is so fast. The application of technology to traditionally quite common high volume transactions is at a pace we've simply never seen before.
Yeah, I think further to that, the Treasury is being impacted by digitization, as you said, which drives our innovation. So corporates are looking at the fact that they have to drive operating efficiency from technology, so they need to digitize their treasury, not just to gain that efficiency, but also because their new team members are millennials and they're expecting much easier tools to use in the treasury function.
We're looking very much internally at all of our manual processes, and the current levels of automation really offer a great opportunity to corporate treasuries to gain that efficiency so that they can use the resource that they have much more effectively on a number of the strategic initiatives, helping them, back to what we were saying before, as they're being pulled in different directions within a broader remit within the company, they need the capacity to do that, and automation is one of the ways that can help them with that.
And sometimes it's an old-fashioned change to become more efficient. Interestingly enough, we still have clients who want CD-ROMs monthly with their transaction information. So sometimes we have to stand up and say, we're going to terminate the delivery of CD-ROMs. Here are the alternatives that we can bring to you. So it's as much as saying, let's cause paper statements to go the way of the dinosaur. Let's have CD-ROMs terminate to, oh, you carry your handheld wherever you go. How about we help you fill your treasury services needs via your handheld?
Yeah, I think it's a good point, Stephanie. So our clients should really come to us as their transaction services bank provider and say, what else can I do to be more efficient? The other opportunity also is to free up working capital. With rising interest rates that we're seeing here in the US and other markets, what can they do to leverage their banks to free up working capital? So we're seeing, again, corporates relooking at supply chain finance or deploying supply chain finance, which they haven't done before.
Obviously, we've been living with low interest rates for quite a while now, and we think there's only one way that they can go. What would you be advising corporates to be thinking about if we are going to have a rising interest rate environment?
In one way, there's a problem being solved for our clients here because particularly in Europe with negative interest rates, this has been a big challenge for treasurers. They've had to figure out how they can place these euro deposits without getting charged, and often they can't. So it's been an expense and a challenge to manage those negative rate currencies. I think they're also going to start generating a better yield on the corporate cash deposits that they have. So that's all on the plus side. Now, obviously, in a rising rate environment, there's an impact on the borrowing side as well. But I think, and particularly in your business, JP, that's where you see some interesting dynamics in a rising rate environment.
Our clients are looking to extend their days payables and in return to reduce the amount they may need to borrow or to drive more efficiencies as well for their company in terms of having more deposits, earning higher rates. And therefore they look at supply chain financing, they look at negotiating their own terms with their suppliers, and as well as looking at their smaller ticket spend, which still does represent a large amount of the buying behavior the client has, to put them into virtual cards. So not just the traditional travel, but moving into smaller suppliers, as well as looking at meeting and events, whatever spend they can drive into a purchasing card that enables them to extend their days payables outstanding by at least 30 days, if not more.
And think about it, we have a whole generation of treasurers and treasury departments who have not lived in a rising rate environment. And so one of the things we spend a lot of time doing is talking about how that environment impacts the deposit rates, the borrowing rates, the working capital cycle as a whole, where US dollars, one of our major currencies, have had so many interest rate rises and more to come. We find our treasurers looking at that cash with a much closer eye than they would have done a year ago, 2 years ago, most certainly 6 years ago.
In a rising rate environment, suddenly, well, not suddenly, gradually, you start to see greater yield in other instruments. And so this is, I think the money market funds look at this as a good opportunity in a rising rate environment for them to grow their asset books.
We've been talking about the outflow, which is how they can be more efficient in how they pay their suppliers and so forth. I think also they need to look at the inflow. So how can I collect the cash faster? How can I reconcile transactions coming into my account faster in order to reduce their receivables in terms of outstandings?
And on that inflow side, that's where we've used artificial intelligence to help when receivables come in. We have a global product used by many of our clients, where as the receivables come in, we use artificial intelligence to determine where those receivables should be applied. And that those receivables can come in any form, and again, we get smarter and smarter as we look at the incoming and then allocate it as the company would desire.
And that's a pain point for a lot of corporates, isn't it?
Reconciliation.
Yeah.
Think about it for you personally.
Yeah.
It takes a tremendous amount of time to try to match a receivable with its intended purpose. And if you can create a system that gets smarter every time it sees that particular receivable, it can apply it much faster, and a human being is not needed.
There's so much going on. How as a corporate should I cope with this, with all the technology that's coming down, coming at me, in terms of actually finding the things that are going to work for me?
In order for us to understand what do corporates really want, we did a survey and we asked our clients globally, what do they see as innovative from a bank? What do they expect a bank to do that's innovative? And a couple trends that came out. The other big thing that we measure ourselves on client delight. I think it's great. Whenever I meet with my colleagues in operations and service and fulfillment, so implementation, they measure themselves based on, after they've done something for one of our clients, they measure and they ask the client, how do we do, what kind of service did we provide you? And they rate themselves based on client delight.
And I think technology helps the knowing your client relationship work much more smoothly than I personally remember in my career. We have used technology to build databases that give us information on what a particular client or industry of clients or region of clients are doing. What type of receipts are we seeing? What type of payouts? What is the gap between a receipt and a payout? What means of executing a payment is being used?
Wow.
Was there some process that, as we look at it, is a little less efficient than it could be?
Yeah.
And our client-facing teams should have an opportunity to review all that data and get in front of the client. We meet with our clients regularly. That's our role, and that's our opportunity.
I wanted to talk about regulation. You can't really talk about banking without talking about regulation these days. What are you doing in this space?
And I'll start, but I think about regulation right now And Matthew, you seem to be in the eye of a storm of regulatory change in EMEA. But I look at regulation as an opportunity for us to evolve. And I think about PSD2, the Second Payment Services Directive out of the EU. What did we do when faced with that regulation? We created an entirely new way to connect with our clients via the API connectivity. So that's where regulation leads to a better way forward that might not have been contemplated when it was originally published. But Matthew, I know there are any variety of new regulations in Europe right now.
No, I think that it's an interesting point, and regulation, to your point, is both a challenge and quite often an opportunity. On the challenge side of things, the pace of regulatory change is a significant burden for banks. So they're having to spend more and more money each year to remain regulatory compliant. And it's a challenge as a bank to make sure you maintain the right balance between investing in growth and investing in new technology and staying regulatory compliant. One of the things we focus very, very hard on doing is making sure that we continue to ring fence all of our investment around innovation and growth in the business so that we can continue in this period of great change, as we alluded to earlier, continue to stay market leading across a number of areas. What we've now seen in recent years is this transition now towards real-time payments on a global basis. I mean, there's not one region of the world that doesn't have examples of real-time payments now. And clearly that is the future trend. But when you start then coupling that concept of open banking with real-time payment infrastructures, there is an opportunity to start to bring very interesting capability to market and really change the way the traditional banking model has worked. And if you think about it, for example, if you've got full open banking and you've got full real-time payments, you will probably think very differently about which banks you pick to work with in a number of different jurisdictions, because you have a much easier way of connecting to those banks. You have a much easier way of managing the funds flows in and out of those banks, because you've got real-time payments and you've got APIs.
It's really an opportunity for corporates on the collection and receivables end, because it should enable them to move how they collect money to real time and leverage APIs to potentially connect to whichever systems their clients may be using in order to feed them the information they need to reconcile the invoices. So I think real-time payments is not really about efficiency on the outflow, because most of our clients know why they schedule a payment, and payroll, supplier, and then there's large wire for treasury flows. But it's more on the collection receivable side. How can I move my collections to a real-time basis, especially as you go to smaller transactions, and collect your cash faster?
Is there an impact on cash flow forecasting here as well?
Certainty is certainly of great value to corporate treasurers around the world. Clients have told us in the survey we referenced that that is the most valued service that we as their financial services partners can provide, is greater transparency in the cash flow forecasting.
What are the winning factors for modern corporate treasury?
I think the key is to stay nimble. In a world of rapid change in all dimensions of corporate treasury, if you can stay nimble and if you can arrange how your group is organized, the technology you use, and your processes to change as systems change, you will be far more successful. One of the things we do it all around the world, we gather treasurers together and we let them talk about their areas of focus, their best practices. We absorb information so that we can better serve, but technology is a must in this day and age. If you're not technologically proficient, I think you fail.
Yeah, I would almost refer to it as intellectual curiosity. There's a lot to stay on top of, And yes, you need good advisors around you. Yes, you need to make sure you've got the right relationships with the right banks that give you the right level of advice and service. But I think the modern treasurer needs to be intellectually curious. And I think the modern treasurer has to be a very proactive treasurer.
I think treasurers also have to look at selecting providers that are not just best on price or best on a specific thing, but providers who are focused on making it easier for them to do business with them. Because they are going to have a number of bank accounts. They have to maintain their information with their bank. They're going to have service items handled by their bank. So which bank is providing me the best service and making it easier for me as a treasurer to deal with them?
It's funny, JP, I often say in our business, it's not planning for perfection and expecting nothing to go wrong. It's what is the plan of action when things do go awry.
And what are the key trends you'd be advising corporates to be watching? Who'd like to kick off?
So I'm very much of the view that when we think about transaction banking, we think it's going to change more in the next 5 years than it has in the last 35 years. And with that, there's significant opportunity for efficiency gains, reducing costs, greater transparency, and better advice driven by data. And it's incumbent on us to make sure that we are bringing that advice to our clients so that they are better informed.
I think Matthew is spot on in every respect. One thing that is constant is change. And I think back to transaction services again 10, 15 years ago. There was very little change, and we started with this. Now the change is constant. So our treasurers, our treasurer clients, have to be willing to look at the landscape, take all of the information they can, and apply it to their specific circumstance. Are they global? Are they local? Are their clients consumers? Are their clients commercial enterprises? One thing that I think PSD2 and open banking is leading to is cross-border low-value payments. So traditionally, money moved between regions and countries for the most part in high denomination wires. And with the digitization of payments and receipts, and with, let's face it, our e-marketplace, which is global, there are a few behemoths, but global, cross-border payments at the low value level are becoming more predominant. And what that means is there's a focus on making that cost effective, and there is generally a currency transaction in the middle of that payment. So there is a greater focus on FX. I think if I look forward at the biggest change for my clients over the next 5 or 6 years beyond technology, it's that movement into low value, cross-border, cross-currency payments becoming cost effective, therefore prevalent.
And I think that the right approach is to look at how will digitization help us improve the client experience that we provide to our clients. So how can they have a better experience with Bank of America? And I think a lot of providers look at all these various technologies out there, but if you look at what we've seen in our consumer life arise is the Apple Siri, the Google Assistant, the Amazon Alexa. And that's something that we picked up on last year in looking at what would that mean in the impact of Treasury. So, a lot of banks are out there trying to create a blockchain consortium, as we are as well. But we also looked at what we are using every day in our consumer life. How will that impact the Treasury? So last year we launched the Cash Pro Assistant, and it's all about enabling in a Treasury function online and over time onto mobile, what can a treasurer get from a Bank of America that will assist them in the way that Siri will help you in your own consumer life, however you use it, or the Google Assistant and so forth.
Well, I think you've persuaded me that it's exciting, not just challenging times. Thank you very much for joining us.
Thank you,
Thank you.
Richard.